Good morning, everyone, and thank you very much for joining. This is the Morning Market Review. My name is Russell Shaw. It's Wednesday, it's the 14th of December. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Just want to turn the camera on here. And whilst that's coming online, I'll just bring up the high risk investment warning. And may I confirm that you guys can hear me and see the screen, and you should be able to see me shortly. Okay, camera is on now, so just want to double check. Can you guys hear me? I'm hoping you can hear me. I haven't got any responses yet. Okay, cool. Thanks, Joachim. Thanks, Anna. Let's bring up the market commentaries disclaimer. Okay. And finally, here's our references: Market Scope, Trading View, FXCM.com. I'm going to use the FXCM calendar. Bloomberg. Let's go through the 5 things that we have to know. We'll do this as quick as we can. The first the first headline says time to downshift. The Federal Reserve is poised to moderate its aggressive tightening on Wednesday, while signaling that interest rates will ultimately go higher than previously forecast. Consumer price data released yesterday suggests that the worst of US inflation may have passed, making it easier for the officials to downshift for a smaller rate increase. The tricky part will be convincing investors that this isn't a dovish pivot. So that's the big deal. I think that the Fed will have to be more hawkish than they want to be here, because the market really reacts extremely bullishly when the Fed's dovish, which I don't think is what they want. But I think that there is going to be a pivot coming sooner rather than later. So just take a look at the calendar here. Okay, so it's going to be 9 o'clock ZA time, which is 7 p.m. UK, and then half hour later, it's going to be the press conference. European Union policymakers agreed to raise $20 billion, I beg your pardon, 20 billion euro, which is $21 billion, from the region's carbon market to help finance the bloc's strategy to wean itself off of Russian natural gas. Next headline, not counting anymore. Russia will stop releasing comprehensive data on new COVID cases after the dropping of mandatory testing meant that numbers no longer reflected reality. Extradition fight, and we're going to talk more about this in the crypto minute. Sam Bankman-Fried told a Bahamian judge at an arraignment yesterday that he wouldn't waive his right to an extradition hearing, so he's effectively fighting extradition. A defense lawyer said the FTX founder planned to fight being sent back to the US. And the more the news comes out, the the more serious this is. He's facing a litany of civil and criminal charges here. So we'll just have to keep an eye on this. European stocks on track for a muted start as traders weigh the softer US inflation data. And that's ahead of the Fed policy decision this evening. Tomorrow we're going to have BOE and the EU rates. Just something that's very interesting is that the core inflation rate out of the UK that came in much lower than previous, came in at 0.3% month on month, and it was 0.7%. 0.7% in the sorry, let me just see where's the actually 0.6%, I think. There we go. I'm begging your pardon. It was 0.3%. The previous was 0.7. The forecast was 0.6. If we just take a look at it on a year-on-year, we're looking at the core 6.3, lower than the previous 6.5, and it was forecast to be at 6.6. So the UK inflation data also starting to show signs of rolling over on a headline basis. It's 10.7, which is lower than the 11.1. It was forecast at an 11 handle. So inflation data coming down in the US yesterday, inflation data coming down in the UK today. That's ahead of the Bank of England. So it's going to give the doves in the BOE. Yeah, it took a while for the screen to show. And there's no lag now, is there? Just let me know. All right. Let's take a look at this. All right, this is a monthly chart of the real rate. Here's the US dollar underneath. Here's the correlation coefficient. Correlation coefficient is really strong. Let's just put in the label here. It's at 94%, right? So it's very, very strong. What I wanted to show you is we've had 1, 2, 3, 4, 5, 6 of the last 7 months in this leg here were showing up, then 8, 9 showing down legs, and this is the 10th. This red over here was because of a really muddled up press conference, which took the real interest rate down. This was because of really bad communication coming out of the Fed during a press conference after the July rate announcement. So this over here, I think, is exaggerated. But the last 3 candles here on the real rate are really interesting. Take a look at the current candle. Market is uncertain now. It's a spinning top. But look at the dollar. Dollar's anticipating weakness at 94%. That real rate, I think now, we've been looking at the median. The latest median hasn't been calculated by the Cleveland Fed just yet. It should come out today, I would expect. I think it's ticking down. It looks as if we're getting to that apex of the current rating cycle, and then we can potentially start looking for potential bottoms. And in fact, the market may be already discounting in. That's why the market's already starting to discount, I think, more positive news. Let me just pop this in. So it's should come up in the moment. In the meantime, let's just keep looking at TradingView. Let's go down to the daily price here. And you can see, let's even go down to the hourly. And you can see here, this is the announcement here of the CPI. Look at how that sparks down. Look what happens to the dollar. Dollar just sparks down. Look at the correlation coefficient on the hourly, 93%. So it does look as if the real rate now is starting to moderate. Look at the current action. Okay, current action looks something like that, right? So the question is, are we going to see even further price interest rate or yield declines? All right, let's just still opening. Okay. I'm going to bring up another chart here. Let's take a look at NASDAQ. NASDAQ is very sensitive to interest rate changes, so let's bring that up. And you can see as the real rate shoots down, as the dollar shoots down, look what happens to the NASDAQ, shoots up. Okay, and then some strange action after that. As you can see how the NASDAQ pulls back. Even the dollar doesn't pull back quite as poignantly as the NASDAQ. NASDAQ pulls back and effectively wipes out the spark up. My interpretation of that, I think the Fed has to be more hawkish than they want to be today, because they don't want conditions to lighten up just yet. Okay, they don't want conditions to get out of sort of beyond them now. They're actually doing some good stuff here. I want to go and show you yesterday's numbers. Okay, so take a look at the core rate. See, so the Fed operates on the core rate over here, not on the headline. The headline includes food and energy prices, etc. We want to keep a look at the core rate. I actually want you guys to look at the month-on-month here. We usually refer to the year-on-year, so we can see we're down to 6% from 6.3, forecast at 6.2. So a nice surprise to the downside. But look at this on a month-on-month basis. This is actually a very significant movement here. When you start getting these movements from 0.3 to 0.2, they make a world of difference. Okay, they make a world of difference because, I'm just bringing up my calculator here. When you start looking at the, if you start annualizing these, okay, so you were on 0.3% last month, okay? So if you're going to annualize 0.3%, you're going to get 3.7%. Now, so what I'm saying is that month on month, as per last month, was at 3.7%. What's the Fed's target? The Fed's target's 2%. Fed's target's 2%. Okay, we're down now to 0.2%. So now 0.2%. Let's annualize that. Okay. So we're now at 2.4%. Okay, 2.4% is very close to that 2% target. Okay, so this 0.2% is really significant. It's effectively wiped off, moving from 0.3. It doesn't look like such a big movement. From 0.3, this is the previous. This is forecast. Okay, previous. This forecast doesn't seem quite right to me, by the way. But anyway, the previous 0.3%. Okay, 0.3% down to 0.2% has effectively wiped off 1.5% of inflation in terms of forward forecasts for the year. So that's brilliant. Okay, so now these are making all of at this level, it's making the world of difference because we're getting to that all-important 2% target. Now, the interesting discussion here is, how does the Fed manage this? Remember, they don't want a 2% target. They want an average of 2%, an average of 2%. So how they interpret this is going to be interesting, but they're certainly heading to that that 2%. The question is, are they going to try and push this below 2% on an absolute basis so that it sort of averages out to 2%? I think if they're looking to do that, they effectively harm the economy to a point that would be unacceptable, especially after such a tough year. So the idea here is, I think we're getting very close to the apex in that interest rate policy. I think they have to be. I think they have to talk tough tonight because they've still got 0.4%. Effectively, they've got half a percentage point to eliminate before they are at target. So they don't want to let up now. They don't want to come out with a they don't want to come out at a press conference and appear optimistic, because then the market may loosen the conditions to a point that is unacceptable, which is exactly what happened. Let's go back to July. Which is exactly what happened here. You see, this is this loosening condition here in July. Okay, in July we opened at 0.67, we closed at 0.08, so we wiped 6 basis points off of this in July, and that was because of a miscommunication in a a press conference. I don't think that the Fed chair wants to make that mistake when you've just got 50 basis points left until you've reached that 2%, that all important 2%. So that's what I think is showing in the Nasdaq here. When the Nasdaq, so if we go back to the Nasdaq 1 hourly, that's what we see here. Is that I think the market's expecting the Fed to still communicate quite aggressively this evening. All right, we've gone through to the top of the hour. Let's conclude here. Let's go across to the crypto minute, and we'll continue our discussions there. Just before I sign off, if there's any questions, please go ahead and type those in. Any questions, just go ahead, type those in. All right, nothing coming through. All right, let's go through to the crypto minute. Thanks, guys.